Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The month-end low that we're looking for in the December corn contract appears to have hit on a very timely fashion. Here we have the 314.75 coming in to tag exactly on August 31st, and since then the market has been trading to the upside. We're up against resistance a bit right now. It is possible that we could retest perhaps previous highs, but for now we're looking for simply the market to retrace and to find some weakness and maybe give us a higher low and perhaps from here trade a little bit sideways. The most impressive statement is when the market came in and touched natural support. You can see how very well this support held, came into our make or break region, and from there the market really rocketed up. We're looking at 329 as possible resistance, and upon hitting there for 2 days the resistance held very well. Since then we've broken through, so the next key resistance sits at about 347.5. Again, testing previous highs is perhaps going to be challenging, and then we're looking for the market to perhaps move sideways going forward for the next few weeks. For the March corn contract, we had highlighted the value of the overlap of the volatility-based support that came in. That was very close to the 325, which was the 225-degree mark. From there, the market has rallied. And again, we have resistance at about 343 3/4. Above here, we would then be looking for potential resistance at 353. Again, the market's kind of come up from here. We're about 4 to 5 days up from the low. We're probably looking at the market having another day or two with this shortened week because of the Labor Day weekend, and from there for the markets to perhaps soften up once again. From this perspective, we can see where our 1x1 angle came in to play a very key role in potential support. We're up against the 1x1 angle to the upside, which is where today's resistance lives. And again, if the market can continue higher, we're looking at resistance perhaps at the 345 mark over the next day or two, and perhaps even closer to about 350 or so. But once again, once it gets to about that level, we're looking for good resistance and for sellers to come back into the market. For November beans, we had previously discussed how from the August 2nd low up through the high that the market had moved about 77 points over the course of 14 trading days. Literally in half that time, 7 bars, the market moved about 2 2/4 cents more than that range. This speaks to potential weakness in this market in that in half the time it was able to eclipse what it was able to gain over the course of the previous 14 days. Now, since then, we've seen a short-term low that has come in. That low has hit right up against our natural support line, and now we have natural resistance coming in very close to 990. If the market comes up to about this 990, we think good resistance should live there. And again, once it gets to this area, if somehow it's able to get through, we are looking at September 8 as a potential key critical timing factor where the market would potentially top. So what we'd be looking at here is for the market to kind of move up, the stochastic to then maybe turn back down again, and for the weakness to resume. We don't know for certain if that is what's going to happen, but right now, fundamentally, we still believe that all indications are there should be weakness for the soybean market over the next several months. The point of control for the November contract is at 960.5. 960.5 is where the market had a little bit of trouble yesterday. Today, we're finally able to break through. We're trading close to 972 today. And again, the next area of potential very good resistance perhaps is at the $10 mark, but that remains to be seen, again, because he needs to get through that 990 number we just talked about just a moment ago. We have a very similar setup for the January beans contract. The market came in, touched natural support, which was in conjunction with our 270-degree mark at 955.5. Market has moved up from there. We're sitting at 986 3/4 as potential resistance, And then from there, a potential retest of the previous high, which would land it at about 1018. Again, we simply want to see what the market does from here. Above 1018, or if strength is actually able to come into this market, we would then be looking for perhaps a higher low to come in for a long opportunity. But for now, our predisposition is still to the short side. During previous sessions, we've talked about how markets really enjoy moving in full cycle movements. And what we mean by a full cycle movement, that would be moving in a full 360-degree rotation from price to price. So for example, we can see here in the market, it came in near this 360-degree mark, but just above it, it was just shy of the 270 mark. If we count the move from the 270 mark, a full 360-degree rotation would be a move back down to the next 207-degree mark. You'll notice that that's exactly where the market came in and found very good support over the last few days. It came down to about 392 3/4 and has bounced up from there. Now, we are also testing very strong the 360 mark, so it's quite possible that we could see a small move up to perhaps about 412 to 413. And if the market fails from there, one more final test of about 373, and that may in fact mark off for us a final low for this week contract or something very close thereof. One of the reasons why we believe there might be one more leg to the downside here is over the last 4 to 5 trading days, the market has found difficulty really being able to eclipse much of the big drop that it had. If you look at the previous 4 to 5 trading days, you'll see that it traveled about twice the distance. Key resistance right now sits at 402.75. It needs to have a clear close above this area at least 2 or 3 times if it is going to sustain upward strength from this current low. If we get a higher low from this point, that too could be an indication that the final low has already made its print, and then we'll be looking for longs in the week complex that would last through about early to mid-November. But it's very nice to see how some of these levels translate for us into the future where potential moves may exist. We'll give you another example of this in this upcoming chart. From this perspective, we also believe that markets like to repeat previous ranges that it has posted in the past. So here what we did is we took the June high down to the February-March low, and that range came in at 162 1/4. What we then did is we took the next measurement from the next major high and we projected down to where we believe the potential low could come in. That low was projected to come in at 386 1/4. That was only 50 cents off of what ended up being the low last week, and the market has been moving up nicely from there. So you can see how previous movements inside markets themselves have the capacity to give us a foreshadowing of where the market may make its swings in the future. So really, it is no coincidence here that the market came very close to repeating that same exact swing that we saw before. From here, our next key level of resistance sits at right at about 418, 417. And that's where we believe this market can find some great trouble if it's even able to get to this zone or to this area over the next week or two. Lastly, one of the key notions that we mentioned before, the possibility exists that the final low for this contract may have already printed, or one more final low attempt after this week's movement, and then we could be off to the races. And the reason why we believe that we may see another move to the downside is corn and soybean has the capacity to drag wheat down with it a little bit one last time before it sets itself off to really take off. In closing, we'll take a look at the December crude oil contract. If we recall from our previous discussion, we said that once the market enters into this purple zone, shortly thereafterwards, we would anticipate a potential change in trend to occur. You can see within 2 days of entering the zone, the market came in and made a very nice low. It broke through what we thought may have been support near 45 or so, but it was only marginally lower, and it did hold the 43.59 number that was the next level below it. From there, it has since moved up, and we can see a very nice move to the upside where the first area of resistance hit at the 90-degree mark, very close to 48 or so. The market continues to find a little bit of strength today. There was news a couple days ago that Saudi Arabia and Russia had made an agreement with regards to potentially curbing production in conjunction with one another. Upon a mention or upon release of that news, crude oil really ripped to the upside, but that move really dissipated shortly thereafterwards, and that is this move that we saw that occurred yesterday. Well, since then, the market gapped up and continues to move back up to the upside in conjunction with what we were looking for with the change in trend upon entering this purple zone again that we had talked about. Now, once the market makes its way to the end of the zone, what we're perhaps looking at is a retest of the previous highs, one more decline back down, and then one more advance that can perhaps go up and touch near the $60 mark over the next couple months. So we'll continue to monitor crude oil in its movements, but it's been very nice to see how it's been moving here, really in conjunction with what we've been anticipating. Thank you so much for joining us for our weekly market update. Hope you had a great Labor Day weekend this past holiday. Look forward to touching base with you next week.